Hi everyone, Keith Wilson here, spreading a wealth of information. Listen, early last year, early 2020, the CARES Act was introduced and it included a Paycheck Protection Program, or PPP for short. And this was designed to give forgivable loans to small businesses, to help them keep afloat, maintain their payroll during the pandemic. Now, the first round of PPP was $349 billion. Guess what? Dried up within 2 weeks. That was last year. But then they extended it in April 2020 with an additional $310 billion, and that expired in August of 2020. Then, late December of 2020, the Consolidated Appropriations Act, or CAA, that was signed into law, and it opened up a whole nother round of these PPP loans of now $284 billion. It's going to fully open January 19th, 2021. Now, this forgivable loan, if certain conditions are met, is in the amount of 2.5 times your monthly payroll, capped at $100,000 per employee. And it's up to a total loan amount of $2 million. So, here's the other thing. If it is a hotel or a restaurant, then the amount of that loan is 3.5 times the monthly payroll, up to the same $2 million. So let's talk about this. Who is eligible for these loans? What's the difference between first-time applicants and if this is your second time applying? What are the requirements and what are the tax treatments of the loans? But before we do that, I want to invite you to subscribe to this channel, hit the like button as well, so you'll be notified when other videos are available. Now, to be eligible for a PPP loan, it must be for small businesses with 500 or fewer employees. Now, if it's the second draw loan, it's 300 or fewer employees. However, again, restaurants, hotels that have 500 or fewer employees per location are also eligible. If it's the second draw, then it's 300 or fewer employees for them as well. Now, it could be an independently owned franchise. It could be for self-employed workers, independent contractors, gig workers, or sole proprietors, as well as tax-exempt non-profit organizations, tax-exempt veterans organizations, and tribal business concerns, as well as housing cooperatives or eligible destination marketing organizations with 300 or fewer employees, and nonprofit public broadcasting entity with 500 or fewer employees. In addition, your business, it must have been in operation on February 15th, 2020. Now, those are the eligible entities. There are some different requirements between if this was your first time applying versus if it's your second draw on this loan. So first draw loans are up to $10 million, while the second draw is up to $2 million. Additional requirements for second draw loans include if you have received and used all proceeds from a first draw loan by the time you receive the second draw loan. So you've got to receive that loan for the first time, and you should have spent it before your second draw. Also, for second draw, you've got to have 300 or fewer employees. And for second draw participants, you must show that you've experienced a loss of at least 25% of your gross income in any quarter in 2020 versus 2019. Also, for second draw loans, you've got to spend all of your first draw loans on eligible expenses. Now, certain requirements must be met in order for it to be a forgivable loan. So you've got to certify that the current economic uncertainty makes this loan request necessary to support your ongoing operations. That really affects everybody, so shouldn't be a problem. And also, with this loan, you got to spend at least 60% of it towards payroll. Now, the remaining 40%, that can be used for other items such as mortgage interest payments, rent and lease payments, utilities, operations expenditures such as software and accounting needs, professional people like that, property damage costs due to public disturbances that maybe it wasn't covered by insurance, as well as supplier costs such as costs of goods sold. You could use it for worker protection expenditures to be, COVID compliant. Now, if you use the loan amount for all those expenditures that we talked about, the loan is forgiven. It essentially makes it a grant. And then we get to the tax treatment. So what is the tax treatment of this loan? So when this latest round of PPP loans was introduced in late December 2020, Congress, they really made it clear that if those requirements were met, then that loan would not be taxed. So what happens is businesses would receive a tax credit called Employee Retention Tax Credit, and that offsets the amount of the loan, essentially making it tax-free. But here's the thing, I would strongly suggest you consult with your tax professional when it comes time to facilitate this tax credit. Now, here's some other things to consider when obtaining a PPP loan. So you can choose between 8 weeks to 24 weeks to use those funds for those eligible expenses that we previously mentioned. You can apply for this loan through any Small Business Administration approved lender. It could be your own bank or a credit union or your community bank. The deadline to apply for this loan is March 31st, 2021. And I would really suggest that you reach out to several lenders and apply at the same time, because some lenders are kind of slower than others. But once a loan is approved, you can withdraw that application from those other lenders that you applied for, because if you're thinking that you can get 2 loans from 2 banks, that's not going to happen, because once the first loan is approved, they code it and it negates all those other applications. So that's not going to work for you. And incidentally, all these loans, they're backed by the federal government, not the bank. And you don't have to put up any collateral, or there are no personal guarantees that are required. So I would recommend that if you qualify for this loan, you're eligible, you apply as soon as you can before that funding runs out like it did last time. So, if you'd like to see more videos like this discussing your personal finance, be sure to hit that subscribe button below. I would really appreciate it. Thank you so much. And remember to be wise with your money.